Has the dollar topped this week? My name is Blake Morrow, and you are listening to the Week Ahead video. Thanks for tuning in. And oh boy, do we have a lot to talk about. You know, last week's video, if you recall, I was filming on a Friday, headlines hit the market. I had to stop what I was doing, look at the markets, show you guys how I was seeing things. And that could very easily happen today as well. The markets are moving all over the place. It was a jobs report week. That was this week. You know, we got a jobs report, a little messy. I mean, the unemployment rate went down. Then we had, the jobs report came in a little worse than expected, the headline number. So it was kind of messy as far as a result goes or a move went after that. But it was the inflation expectations that really hit the market. Then we just got hit with a bunch of headlines over the last couple hours regarding some reciprocal type of tariffs that Trump's thinking about. And then you have a concession from the EU on automakers. And it has brought us so much volatility on a Friday. I'm not even really too sure where to start. But you know what? Where we will start is talking about next week. Next week, we do have the CPI, and it is going to be an inflation week. Everybody's focused on inflation, especially with those University of Michigan inflation expectations that came out a full % higher than what we had on the last reading. So obviously CPI is going to be in focus, but we have a lot of other countries that are reporting CPI as well. So it is going to be a very busy week. So make sure you all stick around. I'm going to be talking about all of this, and let's get to it. So I'm going to go ahead and put us up on the Forex Analytics platform. Actually, as I do this, I do want to mention, if you guys haven't tried out Forex Analytics, this is first of all, it's one of the busiest communities you can possibly find. I mean, if you want to, this is our Forex Analytics chat room. So when you take a trial, it's $1 for 10 days. You jump in, you get this dashboard. The dashboard has 30 different instruments of different types of analysis: macro, basic, technical, candlestick, harmonic, Elliott wave analysis. You have a lot of great tools. You get live charts. You've got live squawk feed, which is awesome, especially when you're trying to catch up overnight. You have risk management calculators. You have, active patterns in play that we're putting out. But the best part, I want to say, of this community is the chat room. So you click right here. Let me show you right where you do it. See right here where it says go to chat room. When you click that link, it takes you to this chat room. And then you can chat with not only myself, other traders, see what they're thinking, what everybody else, this is Nick, which you'll hear from him later, what he's thinking, K-Man, Ryan, what Ryan's thinking as far as the data goes. You can see what trades we're in, and you can see, like, I'm closing out positions, bought dollar Canadian, sold euro dollar, out euro dollar for 11 pips. Just a real-time running of what positions I have open, what positions I'm taking. But it's not just me. It's K-Man, it's Simon, it's Rick, it's Mo, it's so many other DK, so many traders out there showing you exactly what they're doing. And it's our community. It's the most active community you're going to find in the market. So $1 for 10 days. Try it out. Okay. So let's talk about what's happening this next week. I'm going to be breezing through this stuff, and the reason why I'm going to do that is because we basically have we have so much stuff that we're going to be covering in this week's video that I need to just kind of focus on certain things. So let's just run through it. And by the way, you can follow along in the calendar in Forex Analytics. You just put when you want to see the data, and then you can just scroll through it here as well. Like, today's non-farm payroll data is right there if you want to know what we did for non-farm payroll. Okay, so next week, Monday, we have Norway inflation. Matter of fact, we got a couple pieces of data coming in from the US dollar Norwegian or for Norway, which I find is very important. Let me take you over to the chart. These are our week ahead charts, but I want to show you the US dollar Norwegian krona specifically, because we have been discussing how important this 11.20 level is, and I'm actually even looking at 11.17 now. That is the data, or that is this level right here. Okay, so that's going to be really important support moving forward. And with Norway inflation coming out and inflation running a little hot globally, there's a risk that we see a breakdown. And we also have Norwegian GDP on Tuesday. Speaking of Tuesday, Tuesday is day one of the Humprey Hawkins testimony. That's the two-day testimony from Fed Chair Powell. It became popular in the Greenspan era. They called it the Humprey Hawkins testimony. I forget exactly what the reason was. And I was trading at that point, but you know, who remembers what they were doing 28 years ago? You know, I was just trying to figure out myself as a trader in the market. So, but two-day testimony. First day is going to be on Tuesday. Second day is going to be on Wednesday. Obviously, he's going to be drilled pretty aggressively regarding what's happening with inflation. So, you know, let's take just a gander at the dollar index, because I think the dollar index, and we need to look at it anyway, because we do have actually on Wednesday, which is day two of the testimony, we have CPI, and then on Thursday we have producer prices. But take a look at the dollar index, and I'm going to actually show you a different chart really quick. I'm going to go to a weekly chart of the actual dollar index and zoom in. Okay, look at that candle that we got, all right, on a weekly basis. Not only do we have a lower high, but that is a nasty reversal candle. So, you know, when you go to the dollar index, it's actually moving, and you look at the dollar candle, the dollar index, it's recovered a little bit today, but I'm actually looking at it as a bear flag pattern. Now, if you didn't know it was a bear flag pattern, well, if you were a Forex Analytics subscriber, we talked about it being a bear flag pattern, being at the 38% retracement. So you can click on dollar index right there, and you can say following the non-farm payroll, barrage of headlines, a dollar index is back at a 38% retracement, may be developing a bear flag pattern, right? While below the 103.80 level. This was updated on Forex Analytics 32 minutes ago. You can see it 32 minutes ago. You got this chart. Now I'm showing you guys, obviously you're seeing it on the weekend, but I believe it is a bear flag pattern. If it is, the bear flag pattern has a long way to go. So if you look at like the distance of a bear flag pattern and where it could travel to, we could actually move all the way back down to 105.60 if that flag pattern does complete. The level that I care about the most right now is 107.30, and you have 107 right here, but 107.30, critical support. Remember, we're talking about the dollar. We have inflation data. You saw today, and I'm saying today as on Friday, you saw Friday's inflation expectations. Everybody's going to come in this week looking for a hot number for CPI. What if it's not hot enough? What if the Fed Chair Powell says, yeah, you know, the door's still open for rate cuts. We are anticipating a weaker economy because of tariffs or whatever the case may be. Because, you know, he's going to be quizzed on that. If the dollar breaks down, it could be an aggressive breakdown. So when the title of this video is, has the dollar topped? My opinion is it has. All right, a couple other things that are happening this week. On Wednesday night or Thursday morning, we have New Zealand inflation. Now you can look at the Kiwi or you can look at the Aussie the very same way. It hasn't really moved a lot this week, but I want you to focus on the fact that not only, and these are targets that we were talking about last week, I'm just going to get rid of those. Not only do you have the Kiwi, but you also have the Aussie that are very shallow retracements this week. Very shallow retracements. So when their retracements are this shallow, that means the propensity is for higher prices. Now, again, we have inflation expectations Wednesday night. That's going to be out of New Zealand, and I do think that's going to be very important. Speaking on Thursday, we also have Switzerland's inflation. Now, I want to talk to you guys about the US dollar Swiss franc, because not only do I think it's building a double top up here, but what it's really doing at the moment is it's following a channel, a rising channel, quite well, which could be developing actually more of a bullish wedge if those highs persist. But, you know, and again, I'm just going to reiterate, if you want to know my current analysis or our team's current analysis, all you have to do is go through Forex Analytics and just pull up the dollar Swiss. Let's see if we can find it real quick. The Swissy, I have my symbols a little jumbled up, so I'm just going to have to look for it really quick. Here you go, dollar Swiss. You want to know what our charts look like? That's exactly what the charts look like. We're bullish while we're in this channel, but we break below 90 cents, it becomes bearish. Well, guess what? Now you guys know that. So if we break below 90 cents, we break below channel support, that is going to be a bearish event. CPI Swiss inflation. How about if Switzerland's inflation is hot, right? We also have on Thursday UK GDP. Now I'm gonna say this: sterling, because of the Bank of England, it kind of disrupted the way I was looking at sterling. I'm pretty. How should I say? I am pretty neutral on sterling. I'm not going to ignore the fact that we have higher lows, but at the same time, we're really struggling to make new highs. And the new high, as you can see, was like a little false breakout. So am I excited about sterling right now? Negative. But we have UK GDP on Thursday, along with US PPI after that. Friday is going to be US retail sales. So I've covered most of the dollar pairs for you. But do you know one thing that we are seeing? Let me just pull this up really quick. We are seeing an increased volatility, and I'm gonna point this out on a long-term basis. If you look back several years ago and you go back to 2022, 2023, what you're going to notice is volatility when it would base a lot lower. Volatility is basing at a higher level. Do you know what that means? And you see more spikes. That means we are increasing higher volatility. You know what that also means is it's a better playground and trading environment for you as a trader. That's why you have to make sure you look at the trader funding program. If you don't know how to get funded as a trader, go to the Forex Analytics website. Right here it says, if you don't want to trade your own money, click on here where it says get started. You have the trader funding program. You have a couple of different options, but let me talk about it really quick. If you think you can make 10% return without losing more than 6% with an unlimited amount of time, and your 6% risk moves up with a high watermark as you make money. So as you make 1%, it goes up 1%. As long as you can make 10%, get to a 10% profit, and not lose more than 6% as your risk moves up with you, then you could pass an assessment to trade larger amounts of capital. So there's two ways you can do this. And by the way, you're not risking your own money. You're basically risking ours. You have a one-step assessment, which I just explained to you. Or if you're not in the United States and you just want to skip that and just go straight to a funded account, you can click right over here if you're not in the United States. If you're in the United States or anywhere else, you have this one-step assessment where you can access $25,000 up to $1 million in capital. Your assessment fee is already listed up here, but you also get included in the Forex Analytics community at the same time. That means you can be in the chat rooms talking about trades that we're doing, asking me questions. You could say, oh, well, Blake, why are you, what are you doing with the US dollar and why are you doing it? You can ask those questions. You can be in the general chat room, understanding what other traders are thinking and not just what I'm thinking, but other traders are thinking. You can go in the trades room and see what other traders are putting on, what they're taking off, what profits they're taking. What better environment is there for you when you're trying to navigate through the markets and make a profit? So in the trader funding program, you get involved with that. So if you haven't learned about this, make sure you take advantage of it. And this weekend, we are running a special. I believe it's 30% off. Make sure you contact support right here at the bottom of the site. It's a Super Bowl special that we're running. So make sure you ask support about it. 30% off all new evaluations. And here's the other thing I want to talk to you about. If you're new to the trader funding program, when you take an assessment, you get a one-on-one consultation with me. So I'll meet with you for 45 minutes, tell you what it's all about, show you what tools are available to you, and give you some tips and tricks, tips and ideas on how you can possibly pass an assessment because I've passed them myself. So we'll talk about it. So check out the Trader Funding Program. It's a wonderful program that is available to you. Okay, and that's the best thing about having all this volatility. Now, I am going to talk about other markets. I'm going to talk about what's happening in gold. I'm going to talk about what's happening in crude oil, bonds. I'm also going to talk about what's happening in the S&P. But before I do that, I'm going to bring on Nick from Trading Analytix. He's going to talk to you about how he's seeing the equity markets and some individual stocks as well. So make sure you stick around for Nick. Here he comes.
Hello everybody, this is Nick Groves of Trading Analytics. Blake, thank you so much for passing me over the mic. I'm going to go and talk a little bit about equities. So we're seeing a little bit of weakness today following the data that came out. NFP came in under expectations, but average hourly earnings looked good and better. Unemployment looked decent as well, so it's overall kind of a mixed bag. I'm still in the camp that bad data is likely good. If you take a look at that January print where we printed over 200,000 jobs, the market didn't seem to care all that much about that, and the market is rate cut happy. It wants rate cuts, wants weaker data, so I'm still kind of in that camp, but that Michigan sentiment survey on inflation showed inflation going higher this year. I kind of disagree with that narrative, at least over the next coming months. And I'll explain that in a video on Trading Analytics this week ahead of CPI. I'll outline kind of a bull case for inflation dropping. We just broke 500 followers. We'd love some more. Thank you all for the support that you've given us thus far. But let's go and talk a little bit more in depth. So the 38.2, that's where we're sitting right now. If you were with us on the daily roundup in the Forex analytics community yesterday, I pointed this out. It is the continuation fib, and you can see we're also sitting on the 38.2 in the NASDAQ as well. But I think what everyone's wondering is, are we going back to all-time highs, or are we about to break lower? You're seeing some higher lows. Lower highs in the NASDAQ. But I'll point out here, this 21K level is so important. We banged our head on it 5 times and held it well 4 times. And we pretty much put in a false breakdown. So those do tend to lead to breakouts. And I would also say, take a look at some stats about all-time highs. We did make an all-time high this year already. And typically if you make one all-time high, 97% of the time you make another. You'll notice 2022 is the only time where we didn't. So I'm still feeling optimistic. But I also like to play devil's advocate. And sometimes I think to myself, well, could we actually break lower, call it 5,600? I know that sounds crazy, but could we break lower and then actually rip back up to all-time highs again? That's also possible. If you check me out on my Twitter, this is my personal Twitter, Grasshopper Nick, I kind of outlined back in 1999, in 1 year, we had 13% pullbacks that led back to all-time highs. And I think we're in a similar crazy environment. So expect the unexpected, have your levels planned out. I'm looking for that 5,600 level in the event it happens. But overall, I'm really expecting us to probably hit another all-time high. I really am looking at that 6,200 level, 6,185 in the SPX. And one of the reasons why I'm kind of expecting that, maybe even next week after CPI, is when you take a look at post-election and we're falling closest to the red, we typically go sideways a bit in January, rally, pull back, and then really into like the second week of February, we hit a high and then roll over. And even if we don't follow this red line, incumbent party loses, you can still see we tend to have some weakness around this period. So I think we've tracked that well, overall kind of sideways, right, in the initial parts of January, ripped higher, pulled back. And if you weren't paying attention to all the DeepSeek news and everything, this is pretty standard. We broke out, back tested around the 50% retracement in SPX. This is all pretty standard for the S&P. I know that this news has been nuts. And let me get back to the continuous contract. But DeepSeek brought us down, tariffs brought us down, and the market continues to come right back up. So if that's not bringing us down right now, I'm not too sure what will, and that's why I'm still leaning towards the bullish side. But let's go and talk a little bit about big tech, because we've had some interesting development. So Microsoft is kind of freaking me out at the moment. I've drawn Microsoft up so many different times over the last, couple months, but ultimately I left it with this wedge. So, we've broken down from it, popped back up it, but broken down again. We're on lows again. But part of me, after drawing this up so many different times, just wants to go, hey, look, we're in a range, okay? And I don't really like trading in ranges. I don't know, some people do well scalping it and whatnot, but I would say that the 786 comes in at 400, and really the range low does as well. So if Microsoft gets down there, it really needs to hold that 400 level. I think it's pretty crucial. And there's a lot of other levels that we need to look at too, like Apple. If it takes out that 220 220 level. Amazon, we just had earnings in it yesterday, and I know it's coming off, but I still think it's still holding this breakout of this bull flag. This bull flag does actually point up towards 250 in Amazon, but I'm looking at this 226 level. But if that gives way, if Microsoft gives way, Apple, like I said, so those are some levels that I'm looking at. But overall, I still think we're relatively bullish. And one little bull case within the Mag 7 is this NVIDIA chart. So, NVIDIA really scared people the other week, and for good reason. DeepSeek did come off as concerning, but we came down to this 117 level, popped up. I was telling people, this market on Monday with that open, given the tariff news, it might want to just stop people out and tag that 618. You can catch us in the chat room here. I update in there with Forex Analytics. But we came down, stopped everyone out, and just reversed, right? And now you have a lot of people that have been trapped short here in NVIDIA in the event we squeeze higher. And if it gets up there, it gets above 130, I think it likely squeezes. And, people are still fearful in this market. You can take a look at the fear and greed index. It's at 40. And so I feel as if it's usually profitable to be greedy while others are fearful. One thing I will say, though, on NVIDIA, and this is why this 130, 129 level is so crucial, is that it is the 38.2, that continuation fib. I know we're a little bit above it, but in the event it can turn around here, that would be a pretty bad sign for NVIDIA and probably the rest of some of the big tech stocks. I point out some of the key levels. If you're looking for more of those, check us out on Trading Analytix. And with that, I'm going to pass it on back to Blake. Thank you all so much, and have a great weekend.
Thank you, Nick, for that overview of the markets and some of those individual stocks that you were looking at. Now now it's my turn. I'm going to talk about some of the other markets, but I'm also going to review top 3 setups from last week, and I'm going to give you the top 3 setups for this week. So let's start off with what's happening in the equity markets. So let's go with the S&P. And we've talked a lot about the S&P, about a potential false breakout. Remember we were discussing the spiders? Let me pull those up for you. Remember how we were talking about it may have failed up here because it was right up against resistance? Well, that resistance still is very, very critical. So when you're looking at the S&P, when you're looking at the S&P, excuse me, let me, whoops, that I didn't want to do. Okay. When you're looking at the S&P, sorry about that. I didn't mean to do that. Pulling it back up here. Here we go. So when you're talking about the S&P, that big resistance is around the 6,100. I mean, we have been above it, and even today we found a rejection around it. But I have to admit, the S&P is having a very, very difficult time going down. And one of the things that you're going to notice here about real critical support is that if you take this low to high, the 618 retracement is holding as support. And that's really, really critical from here on out. As long as that continues to hold up, there's really no reason to be on the bearish side of equities. I mean, you could be scalping around, but to take a real big position, like an idea that you want to be short the entire market, you're going to have to get below that 618 retracement. And then and really to feel very comfortable, you're going to have to start making lower lows. And that is just not what we're seeing right now. So the S&P just is a very bullish consolidation at all-time highs. Let's talk about gold and the gold market. Now, gold continues to make all-time highs. And we talked about that last week. And we broke above the 161% extension. Now take a look at this extension. We are consolidating around the 127% extension of this move. So let me pull that up for you. And let's zoom in. And you can see this is the 127% extension of this last major move down. We're holding there. Now, I just did an interview with Jim Welsh from Macro Tides, and he did a little bit of sleuthing on what might be driving the gold market. So make sure you take a look at his video because and that's found on tradersummit.net. The thing about what Jim's saying is he says the numbers with gold that's available and productivity and demand, it's skewing towards this short squeeze, which he's not confident that it's completely over yet. And frankly, as long as you're above 2,800, there's no real reason while you're above this green line here. There's no reason to be bearish. But if we get back below there, I would be worried. I'd be worried, and I think Jim expresses that similar type of thought process too. A couple other markets I want to go over is crude oil. You know, last week we talked about crude being at some pretty critical support. I'm gonna share with you that crude is actually stalling on what I'm looking at is a major broken trend line here, and let me get it for you. This is something that if you're using Forex Analytics, I can just do it this way too. You'll see if you look at crude oil, which we do look at, and go over to basic technical analysis here, you can see this descending trend line, and we're basically just consolidating on this trend line. We were slightly below it, and then we pop right back above it today, and you'll see it's right here. Let me just draw it out for you on this chart. If you take that high, this high right here, that low, and you can see we're just skating across this lower trend line. Now, does that make me, bullish or bearish? It makes me kind of neutral. I feel that it's a very, very difficult trade to be in. So I think there's other places where you can look to take advantage of. One of them being the 10-year. So take a look at the 10-year notes market. We have finally broke out this week. We're just kind of sitting around in the breakout area, but as long as the 10-year can hold above this neckline, which I think we're on right now, this neckline is right around here. That means that bond market should move higher, yield should move lower. That means that we would have a weaker possible dollar. So those are a few markets I wanted to cover with you guys really quick. Now, this is the time where I'm going to go. Also, I did need to talk a little bit about Bitcoin. Bitcoin to me seems like we're just consolidating and doing a bullish consolidation while we're above this 91,000 level. So as long as we stay above 91,000, I don't think there's any real reason to be bearish. I mean, you're seeing a little bit of distribution here, but it's only if we get below the 89, 90,000, that's going to open up some downside in the markets in Bitcoin. But for right now, this is just a simple bullish consolidation. So, this is the time that I'm going to spend a little bit of I'm going to spend a little bit of time talking about what the top 3 setups are for this next week, but I also want to review the ones from last week. So, let's talk about the trade setup from last week. So, the first setup was dollar Canadian. I worked out the whole reason why I wanted to be short the dollar Canadian at 147.50. And why I'd want to be long if we drop to 140. Obviously, after the headline or after the weekend news, we went to 147.50 perfectly, and we overshot it by a few pips. And I don't know about you guys, but I shorted so much dollar Canadian, and it was probably my best trade of the year thus far. So hopefully you guys took advantage of that. It was an amazing drop from 147.50. So we discussed it at length last week. So trade number 1, that one worked better than anything else out there, I think. All right. So, maybe next to this one, dollar Mexican peso. The second trade setup was sell dollar Mexican peso at 21.32. We went to 21.29. Now, we may not have hit 21.32, but I shorted dollar Mex and alongside dollar Canadian. So hopefully you did as well. You can say, well, we didn't quite get there, Blake. You can argue that point, but I don't know. That was pretty much probably one of the biggest, most massive moves you were going to see ever. So I gave you both of those last week. I'm going to call it 2 for 2. Third one. Euro Swiss, short below 94 cents or long above 95.10. So the Euro Swiss did break below 94 cents. Okay, let's see. We broke below 94 cents. We were going to either trade it on the long side over here, try to trade up, or if it broke below 94 cents, you could have made money. You probably could have traded a couple of different times against this broken trend line. It is actually, as we speak, at 93.99. So if you actually sold it last week and you bought it back here, it's a break even. So we'll just say 2 worked, 1 break even. 4th trade setup. I gave you 4 last week. The 4th trade setup was short DAX, counter trend at 22,000. Well, if you saw the German DAX, we hit, the high was 21,945. Well, if you didn't catch it, and you're like, well, Blake, it didn't quite hit 22,000, so there. Well, you know, if you are in the Forex Analytics community, you saw the pattern in play come in at that point in time. So we put that out a couple of days ago. So yesterday, actually. So if you're a Forex Analytics subscriber, you got it. And if you're not, well, maybe you missed it. Anyway, I think that was some pretty damn good setups for last week. So here are going to be your top 3 setups for this week. So first setup of this week is going to be a breakout of the Aussie dollar above 63 cents and an add. So let me just show you guys. 63 cents right here, a break above 63 cents and an add in a profitable trade above 63.30. Now, obviously, we're going to have to see some news that allow for this this to happen. And let me grab an arrow here. We're going to have to see some of this tariff news abate over the weekend. But I believe that's probably one of the better setups going into this next week, is that we have the Aussie dollar, which is very, very, very shallow retracements at this point. And I think that's going to be a wonderful trade setup going into this next week. Next trade setup is dollar Swiss franc. If the US dollar Swiss franc breaks below this ascending trend line, you want to be on the short side, preferably below 90 cents. So looking for a short of the US dollar Swiss franc below 94 cents. And last but not least, dollar Canadian. The dollar Canadian looks vulnerable. And because it looks vulnerable and it looks like we have a bear flag pattern developing, you can see it like that, it looks like we are going to trade back down towards 40 cents. So a break below this support, break below this support at 142.60, we're looking for a move back down towards 140. So as you can see, all of my trade setups are set up for dollar weakness, that we're looking for dollar weakness across the board, because at this point, that is my bias, because like I said at the title of this video, I believe that the dollar has topped. Anyway, guys, gals, if you find these videos very beneficial to you, you love them, and you can't live without them, make sure you give a thumbs up to myself, but more importantly to the team that edits these, gets them out on social media so you can actually view them over the weekend. Give them a big thumbs up. Jump down in the comments below and make sure you try out Forex Analytix. You know, it's $1 to do that, but to give us the thumbs up, to comment, and to subscribe to this channel so you don't miss any of these videos, it's all free. So with that being said, I'll see you on the Monday F.A.C.E show. That's our free show. That's Monday morning at 8 a.m. Eastern. And if you don't hear me there, or you're in European trade, but you want to catch our European show, catch Ryan and K-Man on the Flow show, which is just a few hours before that. All right, guys and gals, my name is Blake Morrow with Forex Analytics. Thank you for spending your time with me. I'll see you on Monday. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.